Yo, what's going on YouTube? Welcome back to my channel. Today we will be going over a weekly recap, a little foreshadow of what is yet to come. And yeah, let's get right into it. So I created this PDF with a couple of screenshots and a couple notes that I will be going over. But yeah, let's start on the highest time frame, the monthly chart. Let me zoom in for y'all. All right. So as we can see, this monthly candle is insanely big. It's nearly 3,000 points so far. Who knows how it's going to end? We still have a couple days left in this candle, so we could begin to retrace. But so far, it's massive. Like I said, almost 3,000 points, which is absurd. But yeah, in this monthly time frame, we can see AMD, which, if you guys don't know what that is accumulation, manipulation, and distribution. The accumulation phase has been occurring the past couple months with this range where price couldn't break out of the swing low and all-time high. So that was the accumulation range. Of course, we got some shitty ass price action throughout the past couple months, but finally we're over that. And then last month during March, we created this bearish candle, sweeping all the lows that we generated. For me, that was the manipulation phase on the higher time frame. So you can see March monthly candle was the manipulation phase. And then we are currently in the distribution phase right now with April's candle. And some notes have said nobody knows how much. What did I say? We are currently in the distribution phase of how the market moves. Nobody knows how much we will accumulate, but I meant distribute. We could keep going higher. And then let's go back. So these green lines right here are my projections of where I think price can go according to standard deviation. So you can see I use the swing low and swing high of the range, and it's the negative 0.25 and negative 0.5 price levels, which give us these price levels right here. And I believe that's where we're heading. So yeah, let's continue. Let me make this single page. Yeah, so the green lines were, like I said, were the standard deviation projections. Pretty basic stuff. Right here we have the weekly time frame. So you can see we tapped into this monthly busy, respected it, couldn't even reach consummate encroachment, which is bullish. We recently just created this weekly busy, which is now unmitigated, meaning price will likely seek out this fair value gap, wanting to rebalance the price range. Of course, we swept liquidity. We swept all-time highs, which is the reasoning for this black line. So yeah, my notes. I said we create a weekly busy. We'd like to see this level hold. If we get a bearish retracement into the gap, price will likely reach the most recent swing low if we get a bearish candle closure below this gap. If we do get that, like I said, we'll probably be targeting this. And I said price will likely reach price target number 1, this green line, if we do get a bearish retracement into it and respect the fair value gap. Something else to note on the weekly chart is that we got a bullish candle closure above previous all-time high, which is, in my opinion, a very strong bullish signal. If we wanted to retrace, I believe we would just wicked over and not actually gotten that full candle closure. So moving on to the daily time frame. So as you guys can see, we are extremely bullish. My apologies, guys. Give me a second. We're back. I had to get some Lippuccinos. Everybody knows you can't record a YouTube video without a Lippuccino. 6 milligram. 6 milligram. So yeah, now that our Lippuccino let's get right back into the video. Right here on the screen is the daily time frame. Like I said, extremely bullish. In this entire move, we have one bearish candle, which is fucking absurd, meaning we will likely retrace all the way down into this bullish order block, which aligns with OTE price range, which are these levels right here, these three lines. Equilibrium of the range is right above the weekly busy that's unmitigated, so it does make sense if we retrace all the way down into this gap, and then the market makers, the banks, the big players, they'll all likely buy in a discount and shoot price back up all the way up to those green lines that are not seen right here. So of course we're extremely bullish, but I do have some bearish concerns. We are extremely premium, like I mentioned. We created a bearish liquidity void. What's a liquidity void? It's basically when you get consecutive candles that are either up or down. Since we created consecutive bullish candles, the market will likely seek out these levels and want to drop back down into those candles to balance out the price range. That's just what happens. That's how the market moves. You can go and backtest that, and you will realize whenever we go straight up or straight down, we go in the opposite direction to balance out the price range. Like I mentioned before, equilibrium is right above the weekly busy. That's a great level to target. And of course, there are a lot of unmitigated busies below us, which will likely be seeked. So let's continue. This is the 4-hour time frame, but instead of the regular chart, it's the regular trading hours. I'm kind of blanking right now what the other chart is called. Basically, what regular trading hours is, it's from 9:30 to 4:45, 4:15. That's when the stock market is open, and that's considered regular trading hours. So, of course, every day, the future market does not close like the stock market, which creates these regular trading hour gaps, which are right here. These are all regular trading hour gaps. And most of the time, we like to see those get filled. In this scenario, there's a shit ton of gaps that haven't been filled. So obviously, that's a big concern. We will likely drop down into these gaps and start filling them out, balancing out the price range. But yeah, so now to my overall thoughts. We are extremely bullish. We took out all our higher time frame bullish draws on liquidity. So now it's just a blank space of what we're going to target. I think projections using the fib tool will be crucial for reversals and for long targets, because right now we're just going up into blank, basically. However, I do not want to be looking for shorts when we are this bullish. The market can continue going higher and higher. It will decide whenever it's done going higher. But us retail traders really have no idea when the retracement will begin. My number one rule going into this week is I do not want to try to catch the top. I'd rather be taking longs than shorts, just because how bullish we are. However, on the bearish side, we do have a shit ton of gaps that need to be balanced out. I would like to see price drop into these gaps and then take longs out of them. We do need to balance out the latest higher time frame price leg, because it's literally been going straight up, which is not so healthy. Yeah, and then my biggest concern is I believe we could get a massive deadly bearish candle, which would balance out the price range, but of course nobody wants to see that. So going forward in this week, I will look for longs, and I will only take shorts if it's an A plus setup. But yeah, overall, take longs, be careful, and of course, this is not financial advice, so don't listen to me. I'm just an idiot who learned how to trade based on YouTube. But yeah, that's how I feel about the market. Those are my thoughts. If you guys have any other thoughts, if you guys have different ideas than me, please let me know. I would love to hear them out. Drop a like, comment, and as always, I'll be making trade recaps whenever I trade, and I might be making some backtesting videos in the future. So yeah, peace.